Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and FinTech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and FinTech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbor. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and FinTech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbor. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome. Today is August 12th, 2025, and we are diving into, well, a really intriguing moment in the digital world. We've gathered insights from global market reports, major geopolitical announcements, corporate expansions, critical legal updates, quite a mix. Our goal in this deep dive is really to extract the most important nuggets, give you that shortcut to being well-informed, and maybe explore some surprising connections between things that seem, totally separate. Okay, let's unpack this. Here's a head scratcher right off the bat. Bitcoin and other crypto prices are actually down today, even though we've seen a staggering positive ETF inflow of, $1.19 billion. That's counterintuitive, isn't it? What's behind this immediate market reaction?
It certainly is surprising at first glance. The global crypto market is indeed down about 1.6% over the last 24 hours, standing at $4.04 trillion. Now, while the long-term outlook tied to these macro factors we'll get into looks bullish, today's dip, it might just reflect some immediate profit taking, or maybe a buy the rumor, sell the news kind of reaction to upcoming announcements. Or perhaps it's linked to the temporary nature of a key geopolitical agreement we should discuss. What's fascinating here, though, is stablecoin volume. It's increasing.
Okay.
And that generally indicates underlying market activity, interest. It suggests capital isn't necessarily leaving crypto, but maybe shifting into holding patterns.
Right. So let's get into those macro factors then, because there's this huge geopolitical development that seems to be pulling some serious strings. President Donald Trump, significant moves regarding U.S.-China tariffs. Tell us about that.
Exactly. So the U.S. and China have agreed to extend their tariff agreement another 90 days, effective today. This means suspending 24 percentage points of those additional tariffs on each other's goods.
24 points, wow.
Yeah, though a 10% rate does remain in place. And China will also suspend or remove agreed non-tariff countermeasures. This involved high-level officials, reflects ongoing efforts under the Geneva framework.
That's a big deal. So how do these high-level talks translate directly to the crypto market? Beyond just that initial sentiment flicker, are there specific channels?
Oh, definitely. This policy extension has several expected impacts based on our sources. First, a potential short-term price boost. The tariff suspension, it's anticipated to improve overall market sentiment, might encourage investors to increase exposure, maybe driving some short-term rallies in Bitcoin and other cryptos.
Okay, makes sense.
Second, reduced volatility between the US dollar and the China yuan. A more stable exchange rate there can reduce price swings in Bitcoin trading, especially on Asian exchanges.
Ah, right, because those fluctuations often impact crypto valuations and volume, and many Middle East exchanges are tied to Asia.
Precisely. Third, benefits for the Bitcoin mining supply chain. Lower trade barriers could help hardware manufacturers, distributors, maybe reducing import costs, shipping delays, supports more efficient mining, potential expansion.
Point.
Fourth, potentially increased Asian liquidity. Improved U.S.-China economic ties could boost investor confidence in the region, which might lead to increased capital inflows, higher crypto trading volumes on those Asian platforms. They're already key hubs, as you said.
Right.
And finally, fifth, improved institutional confidence. Continued dialogue between the two largest economies reduces that macroeconomic uncertainty. This could encourage institutional investors to increase their Bitcoin allocation, part of diversified portfolios.
And that $1 billion ETF inflow number certainly points towards that institutional confidence, doesn't it?
It absolutely highlights that point, yes. However, and this is important, this is a temporary move. The suspension is limited to 90 days. So there's a temporary nature risk here. Unsettled issues could resurface, potentially causing abrupt volatility, in both U.S.-China relations and the crypto market down the line. Medium term, perhaps.
And this 90-day window, it holds a fascinating historical resonance for Bitcoin, doesn't it? What's that curious tie-in?
It certainly does. It's quite interesting. Historically speaking, 90 days from now puts us squarely in the last quarter of 2025. And this timing coincides with about 18 months from the last Bitcoin halving event.
Ah, the 18-month mark.
Exactly. And based on historical patterns, Bitcoin tends to, well, the phrase used is go completely berserk around 18 months post-halving.
Yeah.
There's even speculation, and I stress speculation, it could cross $200,000, maybe even $250,000. But it's really important to remember this is absolutely not financial advice. You should always do your own research.
Definitely. Always. We're also seeing some other, maybe more complex geopolitical threads unraveling at the same time. President Trump has enforced a 25% tariff on India, plus another 25% fine for buying oil from Russia. That specific tariff deal has, another 21 days?
That's right, 21 days on that one.
And we're also expecting a meeting between President Trump and Vladimir Putin this week.
Oh.
Hopes for positive momentum on world peace between Russia and Ukraine. How do these more, let's say, punitive or conflict-oriented tariffs on India and Russia potentially differ from the U.S.-China deal in terms of immediate market impact, given the different goods, different contexts?
That's a really crucial distinction to make. While the U.S.-China agreement is aiming to reduce friction and foster some stability, the tariffs on India, and particularly that Russia oil fine, they're more about leverage, geopolitical pressure.
Right.
So for crypto markets, this could mean maybe some localized volatility, certain regions, or maybe assets tied more closely to those specific economies. But then you have the world peace talks angle. If those are successful, well, that could introduce a wave of positive sentiment.
Potentially overriding some tariff impact.
Potentially, yes. It might even outweigh some of the immediate negative tariff impacts, leading to broader market optimism. That includes risk-on assets like crypto. It's a very dynamic environment right now.
These macro events, they always have ripples, shaping risk appetite even for the most conviction-driven players. And speaking of conviction, we're seeing an absolutely astonishing high-stakes move today. Really signals belief in the crypto world.
Indeed. David Bailey, he's the CEO of Bitcoin Magazine and Nakamoto Holdings, also known as a close advisor to President Trump. He announced via X, formerly Twitter, that he's always dreamed of buying $1 billion worth of Bitcoin in one single transaction.
$1 billion in one go.
And he says he'll be doing exactly that later on today.
That is staggering. For a single transaction, what kind of signal does a billion-dollar purchase like that send, especially now, to other large investors, maybe institutions still on the sidelines?
Well, it shows exceptional conviction, obviously. In Bitcoin's long-term potential, it definitely positions Nakamoto Holdings as a leader in these large-scale crypto investments, and it's certainly inspiring confidence, excitement within the Bitcoin community.
I bet.
Beyond that, though, it really pushes the boundaries of individual commitment. It might even help accelerate that mainstream institutional adoption curve we talked about. It kind of dares others to show similar conviction, doesn't it? Could be a catalyst for more significant capital flows, putting Bitcoin firmly on the radar of traditional finance in a new way.
It really makes you pause, though. Think about the inherent risks in this space, even with such strong conviction. Let's turn to a significant legal development. Highlights the industry's challenges, its evolution. The Kwon situation seems to be reaching a critical point.
That's right. Kwon, the South Korean crypto entrepreneur behind that, well, $40 billion collapse of Terra back in 2020.
A $40 billion collapse.
He's expected to plead guilty to U.S. fraud charges today in Manhattan federal court. And that collapse, remember, had a huge domino effect, impacted exchanges like FTX, Celsius.
Right.
You know, the Kwon collapse, it's more than just a legal saga. It's really a cautionary tale. It underscores how critical it is to scrutinize projects, even ones that seem legitimate at first.
Terra was seen that way by many initially, wasn't it?
It was, even supported by some Bitcoin maximalists when it was buying Bitcoin for its treasuries. But it reveals this fascinating, almost defensive psychological shift within certain maximalist factions. They embraced it, then rapidly disavowed it once things went south.
Interesting point.
The real insight there is how quickly narratives can pivot when, significant capital is at risk, and the inherent tension between ideological purity and just practical market realities. It's a stark reminder that even within passionate communities, self-preservation, market forces, they can reshape beliefs pretty quickly.
This whole discussion, market stability, big investments, spectacular failures like Terra, it really brings up a fundamental question. What is money? Especially now, in our digital interconnected world. And we have a fascinating report out of Malaysia that tackles this head on.
Yes, the Malaysian Central Bank, Bank Negara Malaysia, they've published a report, Fundamentals of Modern Money, offers a really unique perspective. What's fascinating here is the report identifies Bitcoin and, interestingly, Ripple XRP as potential alternatives to traditional money and payment systems.
Bitcoin and XRP.
Yes, and it even recognizes them as money under Shariah principles.
Under Shariah, wow.
The paper views modern money more as a credit relationship, not a physical commodity, which departs from classical Islamic concepts. It proposes this hybrid Sharia classification for these digital assets, both money by convention and debt.
Okay.
Which makes them subject to riba rules, those rules governing interest and fairness, just like conventional money. This is potentially a very big deal for adoption across Islamic nations. Malaysia is a heavyweight in Islamic finance.
Huge influence.
Exactly. Its stance could influence regulators, Sharia councils in the Gulf, Asia, North Africa, potentially opening doors for cross-border trade, remittances, maybe even central bank digital currencies.
That's a truly significant symbolic step. But, okay, while recognizing Bitcoin and XRP as money under Sharia is groundbreaking, what complexities do you see, especially regarding their practical inclusion in financial systems? You mentioned personal reservations about XRP centralization. Does recognition mean instant mass adoption? Or are there still big hurdles?
That's precisely the core of it, isn't it? It's a profound symbolic step, absolutely. But recognition doesn't equal instant mass adoption, not by a long shot. Countries would still need to address, well, massive volatility for one, build robust infrastructure, implement stringent regulatory safeguards.
Practicality.
Exactly. And personally, while I find a report really insightful in how it frames modern money, I admit I'm not entirely sure why they included Ripple XRP, given its highly centralized creation, especially compared to Bitcoin, which is, minted every 10 minutes through a decentralized process.
Yeah, that contrast is stark.
I would have actually liked to see maybe a privacy-enabled coin discussed instead. Something like Monero, which aligns more, I think, with that decentralized, trust-minimized ethos often associated with innovative digital money concepts.
What a fascinating journey we've taken. Finance, geopolitics, digital money. But our digital world, it's evolving on multiple fronts, isn't it? While we've been deep in crypto nuances, another sector is experiencing an equally explosive transformation, and one city is really positioning itself as the epicenter. Let's shift gears. Let's talk artificial intelligence and the ambitious future Dubai is building.
Absolutely. And we have two big pieces of news from Dubai that really underscore their strategic intent. First, Demand AI Group. They're a leader in AI-driven demand generation solutions. They've just announced the opening of a new regional headquarters in Dubai.
Another big company moving in.
It's their 7th global location. Strengthens their Middle East presence. Positions Dubai as that central hub for Gulf operations. They explicitly chose Dubai for its driving ecosystem and business-friendly environment. aligns perfectly with Dubai's vision to be a global AI leader. Their CEO, Michael W., expects this expansion will boost services, attract talent, build partnerships, focusing on tailored, region-specific AI solutions.
Okay, so private companies are setting up shop. But it's not just that, is it? The government itself seems to be actively fostering AI innovation in a very unique way. What's their long-term strategy behind this direct, almost hands-on approach?
That's the second piece of news. And you're right, it really gets to the heart of Dubai's strategy. It's quite clever. The Dubai Center for Artificial Intelligence has opened applications for the second cycle of its Future of Artificial Intelligence in Government Sector Accelerator program.
An accelerator program run by the government center.
Exactly. For both local and international innovators, tech companies. Participants collaborate with over 20 government entities. The goal: develop AI-driven solutions that enhance public services right across the emirate.
Okay.
Now, what's truly insightful about Dubai's AI push, especially with programs like this accelerator, is their model. It's unique. It's a no-equity, fully sponsored model.
No equity.
No equity stake required. This isn't just about attracting talent. It feels like a strategic play to, well, almost hoard intellectual property and innovation. By letting participants retain full ownership of their innovations while providing fully sponsored accommodation and travel for 8 weeks in Dubai.
8 weeks, fully paid.
Yep. Dubai isn't aiming to own the companies. They seem to want to become the global hub where the future of AI applications gets developed and deployed first. It's like a different kind of land grab for the digital age, you see, focused on becoming the prime sandbox for AI solutions that improve government services.
That's a fascinating way to put it. When does this run?
The on-site program runs from October 6th to November 28th, 2025. Application deadline is August 28th. And the first cycle. It attracted 615 AI companies from 55 countries. They defined 183 use cases, piloted 75. So it's already showing significant impact.
What a dive. Seriously.
Yeah.
From fluctuating crypto markets tangled with high-level geopolitics to a massive individual Bitcoin bet, redefining money under Sharia law. And now Dubai's aggressive strategic push into AI innovation. It's clearer than ever that these different worlds are deeply connected.
Absolutely. And bringing all these threads together, maybe it raises an important question for you, the listener. What does this convergence of geopolitical shifts, major crypto investments, both institutional and individual, evolving definitions of money, and rapid AI advancement, what does it actually mean for the future of global finance, governance, even just our daily lives? How might these seemingly disparate trends reinforce each other, or maybe challenge each other in ways we haven't fully grasped yet? Could they even create entirely new sectors or redefine what it means to participate in the global economy?
Think about that. Lots to mull over. We encourage you to maybe explore one of these threads further on your own.